Okay, guys, so we're going to have a look now at some technical analysis strategies that I use to get into trades, but I want to keep it really, really simple because honestly, this is an area of expertise. As many people think they are experts in technical analysis, that can really just become overwhelming with information. And the truth is, as I've shown you throughout this course, guys, what we're always trying to do is we're trying to, first of all, fundamentally understand why a currency is going to be going up in value or down in value. We've been having a look at the performance of an economy and what's happening with inflation, what's happening with interest rates, or what's happening with the commodity prices of a country, which is selling those commodities to the rest of the world. So once we have our fundamental trade ideas based on our spreadsheet that we looked at earlier, and we've got some trade ideas in the market, if we have an idea to take a trade, what we need to do is we need to identify some technical analysis, entry strategies to get into a trade and hopefully make some profit in the markets. Now, I personally only use two very simple strategies. I use support and resistance, which I showed you in a previous video, and I use trend lines to get into a trending market. I don't pay any attention to markets that are not trending because I want to be in a trend where the market is going high in favor of a currency that's going up in value, and I can just enter multiple positions and keep running the trade until the trend comes to an end and keep rolling my stop loss, which I'll show you in a bit more detail after this video. I basically make as much money as I can on the way up. So a prime example of a trending market is we're here looking at the US dollar, I guess the Canadian dollar. From what we can see, guys, clearly between September 2017 up until July 2019, the US dollar was getting stronger against the Canadian dollar. So we have a trending market. So let's just say this is because of higher inflation in the United States, and we're expecting some interest rate hikes by the US central banks, and the markets are starting to price that into the value of the currency because, let's say, in this example, the US has a higher interest rate than Canada, and they can profit from this expectation of rates to continue to go up compared to Canada. So what we want to do is, in a trending market, we obviously want to look at the major resistance levels because remember I showed you in a previous video, guys, we want to be looking at the areas to come out of our trades, or potentially when these key areas keep getting broken for us to jump into more additional trades as well at the same time. So there's two ways you could trade this trend, for an example. A trend line is simply when the market is moving up, and as I was showing you previously, guys, markets start moving straight lines, that moving like zigzag formations. You get pullback opportunities where markets start to form what's called a trend line, and a trend line is basically an opportunity where the market is pulling back and then going higher again, and you can clearly see that the market starts to create these patterns where every time they go up to a line, they keep bouncing off this line, and these are just, you continue to be entry opportunities in the market to catch the trend until the trend is over. So what you do is, to draw a trend line, you want to wait for like 3 pullbacks within a longer term trend, and then you can start to draw a trend line. And once you get like a third retest and it bounces, then you know, okay, this trend line is now starting to hold in the market, and I can use this on the 4th retest, on the 5th retest, on the 6th retest, and keep buying off this trend line as the market is moving to the upside. Whilst the market's trending. Then again, guys, I was talking about the major support and resistance levels. So let's say we have gone to the monthly chart for the USD against the Canadian dollar, for an example, and let's say we've identified some key levels that the market has some price action around. So we can kind of see around this level here, the market does seem to hold as a floor, hold as a resistance, hold as a floor, hold as a floor, for an example. So this is 129, round it off at 130, for an example. So we clearly see there's a lot of price action around that exchange rate price. Actually, I think it's 125. Sorry, my apologies. 125? Whoops, sorry. What did I just do there? What is it? 129. Sorry, that's it. 129. Okay, so we can see a lot of price action around that 129 price. I think it's 129,500 per these guys. So you only go and make sure I get it spot on so I don't make a mistake when I'm into the market. So let's say there. Okay, let's say we've got a trend line in place where we've seen the market trending, going up in value. And then we've got this price here, 129.50, that we've identified as a key level. So what I'm trying to say to you guys is, let's say the market is moving higher. We've identified our trend line. Let's say we bought on the 3rd retest, and as we've had a bounce and we've jumped into the trade, and we bought the markets. Now, you would know that there's a major resistance level above where you've got into the market. So if you want to close your trade at that price, you can. Or what you could wait for is for this area to be broken. And what you can then do is, I like to enter trades on support or resistance levels that are major levels getting broken. So for an example, once you saw the US dollar break past this level against the Canadian dollar, then you could enter the position here, have a stop loss using volatility, which I will talk on later. And then you'd be in the position. And then as the market kept going higher, you'd have caught the whole trade on the way up to the upside. And again, you could have entered another position here, for an example, so on and so forth. Just depends on how long the trend is lasting in the market. So I usually love to draw trend lines. It just really makes it easy. And I combine trend lines with resistance levels. So let's say, for an example, this market hadn't been able to get above this level. Let's say this didn't happen, and then we came down to the trend line again, and then we bounced off the trend line again, and we went through the resistance on the next retest. Then you're even more confident, okay, the trend line support in the market's even more, and the resistance got broken, so let me enter a trade here again, and you've now got two positions in a trending market. And of course, you can close the trade whenever you decide to, or whenever the situation changes where markets may no longer expect any more interest rate hikes from the US, and then you know, well, the dollar's not going to be gaining as much strength as the Canadian dollar anymore because there's no more rate hikes, that the markets are pricing in to the value of the US dollar. So that's the US dollar, Canadian dollar as an example. If you're buying a trending market. Now, here is another example. If you're selling a trending market, and we're looking at the news, we're looking at the South African Rand against the US dollar. Exactly the same situation. So after the pandemic, money started to go back into emerging markets because, of course, they have higher interest rates in countries that have developed economies, and money started to go back into South Africa. So let's say markets start to pull back, and you saw this trend line forming. So you have 3 retests. Now on the 3rd retest, you could have sold this currency pair. On the 4th retest, you could have sold again. For example, had a second entry. Now, as you can see, if you go to the monthly chart, like I was just saying to you guys, what we can see is around this exchange rate price of 15.50, we've had a lot of price action. We've had a resistance here, a lot of resistance here, for an example. So when this market was trending on the way down, let's say you had entered those 2 positions I was just mentioning to you guys. Let's say you've entered, for an example, on the 3rd retest, and then it came up again, and you've sold on the 4th retest. Now you can see that this is a major, it would be a support level if this hadn't already happened. So imagine you can't see this price action, this hasn't happened yet, and now we're coming up to this key level. Once this key level broke, now that could be an opportunity for you to add another sell position here with a 1-month volatility stop loss, which I'll touch on after. And then the market then came up and it bounced off the trend line again and kept going in your favor, and you would have made a really handsome profit on the way down. So there again, guys, is a really good prime example of this trend line just working over and over and over again. So you got in at the 3rd retest, you could have sold on the 4th retest, it broke the support level, you could have sold here, or you could have waited for another pullback to the trend line, it bounced off the trend line, then you could have sold here again, and it came up again, and you could have sold here with a 1-month volatility stop loss, which would have meant you wouldn't have got stopped out. And again, guys, I'm going to touch on stop losses, take profit orders later after this. So that's just a really good example, again, of me using trend lines to get into a trending market. I'm then just using support levels to enter positions. Or for an example, let's say you was happy with taking these positions, you was in a really good profit, and you was happy to take your profits, and you didn't really want to be too greedy and hold on for too long, depends on your personality. You could have used this major support level as a profit time, and you have said, well, I made a nice amount of money on my way down. I just close my trade when it gets to this major support level, for an example. So that's my 2 strategies personally that I use. Trend lines and support and resistance. And me personally, I only use this strategy in a trending market, okay? So let me move on to moving averages now and show you how this can also work in your favor to show you the momentum behind a trending market.